Hello, welcome back to Property Spy. This is the channel where we look at all things property and we dig into the details to bring you the news. Now today, this video is sponsored by Vala. This is a property stacking website where you can just put in all your information and voila, out comes the value of the deal that you are evaluating through Vala. Now today we're going to react to some news and the general market information. And I'm looking at, to begin with, what the media is saying about house prices in November 2022. Let's timestamp this video. Okay, we've just had the Prime Minister, the Chancellor arrive and depart. So now Nationwide says there's market turmoil because the price growth has slowed. It hasn't gone into reverse so much, but it has slowed over the year. Okay, so month-to-month prices fell 0.9%, so that's roughly 1%. So if it's a 250 grand property, 1% is 2,500. It's not really a big deal, but could this be the beginning of something much greater? That is the concern. Now, interest rates have gone up significantly, up to 3% from 0.25% at one point, and that is going to start affecting people's mortgages. Is affecting mortgages already, and the concern is that if mortgages go up, utility bills go up, and everything's going up, inflation's going up, food's going up, everything's going up, and people's wages are not going up at the same rate. So automatically that means, firstly, they can't afford the properties they would normally have been able to afford a few years ago, and secondly, if there's a first-time buyer or someone who's going up the ladder, they can afford less, which translates to less demand. If there's less demand, then guess what? The sellers have to drop their prices. So that's what's happening. It's that dance of lower demand, then prices have to drop, then lower demand, and prices have to drop. And how is that affecting the market? Obviously, the media is pushing the very worst picture possible. Having said that, if you are in the market now, it would be worth considering if it's the best time to go in, or if it's worth just waiting just a little bit to see what actually happens with property prices. Interest rates are predicted to carry on going up, which means affordability will keep on dropping and asking prices will have to drop. People whose mortgages are coming up for renewal, they will definitely be paying, in all likelihood, be paying much higher than they were paying previously. So that might come in and bite a lot of people. But this one is an article which seems to target expats. People from Dubai especially have been mentioned in the article, and it's saying that, well, with the turmoil in the value of the pound, the weakened pound, and property prices falling, and the currencies like the dirham, the whatever, that are tied to the dollar, with that money, with people coming in from abroad, they can afford to buy more, or their money can go further. So whereas, let's say 2 months ago they couldn't afford a 250 grand property, suddenly with the value of their currency going up relative to the pound, they can now afford that 250 grand property or 300 grand property. So it's a good time for them to come in to the market, because the residents, the first-time buyers, the purchasers, the investors here are struggling, and they can come in and pick up the low-hanging fruit. So bad news for some UK residents is good news for the expats. Now, the other bit of news that's quite interesting is the government has earned quite a lot from stamp duty. In fact, they hit record highs in the last quarter. I doubt this is going to be repeated in the next quarter, but in 12 months, just for residential properties, 3.59 billion. And it says it beat the last quarterly record. So that's a huge amount of revenue that the government may now not be able to count on, because the prices have dropped, people are not buying, and there are obviously so many different issues that the economy is facing right now. New Prime Minister, new way of doing things, new ideals, everything has changed, and taxes are likely to go up as well. So let's see. I mean, but right now they've just made quite a huge chunk of cash, and this is something they would want to continue. So the question has to be, what other things could the government bring in to make it easier for people to carry on buying property so that this level of income will be maintained, so level of revenue for HMRC will be maintained. So that's something that is worth looking out for in the coming budgets. But it has been suggested in the media that taxes will go up, so let's see what happens. So all in all, it's not really bad news for everybody. It just depends on which side of the market you're on. Let's look at what's happening with mortgages. So I thought to talk about this one. What happens if a mortgagor or mortgagee, one of them, misses the payments or goes into arrears? Now, the first thing to do is make sure you stay in touch with the lender, keep them informed as to what you're doing, your plans are, and trying to negotiate on possible alternatives. Maybe going interest only if you're on a repayment mortgage, potentially asking for a payment holiday. This article says the FCA has written to mortgage lenders and has demanded that they should be treating customers fairly, so you can count on that. Don't leave it too late. If there are challenges and things are coming up that you know would affect your payments, contact your lender immediately so that the discussions can start. It does take a while to lose a home, so no need to panic there, but you need to put things in place to make sure that it doesn't come to that. Okay, so rates have definitely gone up. I mean, look at this graph here. Previously, two-year fixed, we're just above 2%, but now they're just where it was 6%. That's just a huge amount. For some people, it's 6 times. So what's this one? Okay, so I wanted to raise this page. Different articles, different blogs, just talking about property in general. Obviously, don't just get your news from one page, one blog. Just do some further searches, get the different views, different angles. Because ultimately, if you're in this property market not as a first-time buyer but as an investor, there is the angle of this time is a good time for investors. Firstly, a lot of first-time buyers will be priced out of the market, property prices are dropping, and as has been mentioned here, demand for rental accommodation surges, albeit not in London. So you have rental prices going up, or demand for rental property going up, which means prices will eventually rise, and then you have property prices dropping. That means the return on each property should start rising, and that's the type of setting that investors really crave. Now, Spare Room is they handle houses in multiple occupation, essentially room shares in one property. But this may be giving an idea as to what's coming down the pike. So could it be that people are leaving their one-bed flats and moving into room shares, albeit it could be en suite rooms or shared, just a few shared amenities like just the kitchen and shared bathroom and all those facilities? Or is it just people just turn up from somewhere and they're looking for properties? But if the data is accurate from Spare Room, then guess what? There are some areas worth looking at. So increase in rental demand, 86% in Ipswich. So it's worth finding out why the rental demand has gone up in Ipswich. What's changed? Has there been a new employer in the area? Is there a new uni or something? And see if it's worth going there to invest. Ipswich is interesting. It's gone up the least. So it's gone up the least in Manchester. Interesting. This is demand, by the way, not prices. So let's see. So how demand has changed in London. It's dropped. West Central. 3%. So again, this is the flip side. If you own property in West Central London, not great if it's for rent. But I'm not sure most people who invest in West Central London invest for the rental yields. It's probably for capital growth. But yes, It seems to have dropped everywhere for rental demand. Bear in mind that this website spare rooms deals with room shares, so it might just be that people in London are flexing and going for full one beds. But yeah, that's all I've got for you today. Do feel free to subscribe to Valak. This is where you can appraise properties and stack your deals and get 5 free property credits, and you can appraise 5 different deals, and it'll tell you the best amount to pay for those deals, and it looks at current relevant data. So with these changes in prices, all of that gets reflected in the calculations. So until next time,